But guys, before actually getting into our interesting topics or whatever, I have to address this issue, which actually pissed me off really bad, is my favorite go-to investment, which is SGB, sovereign gold bonds, which I actually invest a lot of my money into, pledge and trade, might go away. And that is really hurting me.
Yeah, man, I feel the pain, bro. That is what I have to say. I mean, gold investment, I think we've spoken about this before as well. Gold is a go-to asset class for all investors. And in India, the best way to invest in gold was sovereign gold bonds. And now the narrative, the speculation that it could go away, RBI not continuing it, it is definitely saddening. I'm also super sad. I feel the pain is what I'll say.
Yeah, and just clarifying, as traders, it is extra sad. SGB, for everyone, it was amazing. For traders, it was extra amazing because it also was a cash component
cash
when you're pledging.
Yeah,
and
absolutely.
you could trade without any worries of margin issues, right? And that going away, I think, it deserves to be your story of the week.
I mean, yeah.
Yeah, but what is this narrative of it going away? I mean, maybe we should talk about that. Is it actually going away? Because there is no formal communication from RBI saying that, hey, we are stopping sovereign gold bonds. Such a communication is not out. But since even then, we see everywhere the speculation and this narrative and this discussion going around that, hey, sovereign gold bonds wouldn't be there anymore.
The reason for this narrative is because usually we see SGBs being rolled out yearly thrice or 4 times. Sometimes in 2021, I guess
Correct.
it was even 6 times.
6 times, yeah.
That SGB was rolled out.
Right.
But since this financial year, there was no new SGB that came out. It was the last SGB came out only in February. So even in our budget, the actual budget which came after the interim budget, we see that some 18,000 odd crores was allocated for SGBs. But even though there was allocation and no new SGBs were released, people are speculating or showing their concerns that SGB might not come out.
Yeah, I can't complain as well, right? I mean, if this was something which used to keep on coming out like 3, 4, 5 times a year, and there was budget allocation as well, and then if it is not happening, then there is maybe some merit to all the speculation as well, right? But before we move ahead, maybe I think we are jumping the gun here. We are moving too quickly, but maybe there are listeners who do not really understand what a sovereign gold bond is, right? So maybe let's take 2-3 minutes and quickly talk about what exactly SGB is.
So the sovereign gold bond scheme was introduced by the central government and RBI in 2016 for just one purpose. They wanted to give you an alternative to purchasing physical gold. Okay, so everyone in India loves to buy physical gold and to invest in it for the long term. So RBI said, hey, we'll give you something amazing on the other side, and which is going to be an alternative for you going to the jewelry and purchasing physical gold. And in order to promote that product, they gave certain benefits along with it. So one was a 2.5% annual interest that they'll pay out on the whatever is the gold price at that time. The second thing was a long-term capital gains benefits that they had along with it. Whenever you're going to sell this whenever you're going to sell this bond issued by RBI, you don't have to pay capital gains after 8 years.
Yeah.
Right? And that was a huge benefit, right? I know people don't think about it actively, but if you buy gold and you're going to sell it, you have to pay tax, right? People don't actively think of it.
Yeah, but when I look back now, in hindsight, it seems to be a magical instrument of sorts, right? One is fundamentally it is already giving you gold returns.
Yeah.
Yes.
On top of your gold returns, which is already what CAGR of gold over the last 10-20 years is slightly under 10%.
Yeah, 8 to 9%.
8 to
it has
9.
put.
So you're already getting your gold returns.
Yeah.
On top of it, you're getting a free 2.5% interest. And
Yes.
then you don't have to pay capital gains on your gold returns. And this is cash component as well.
Yeah.
Like you rightly said. So all these put together, now when I look back, hey, it was a magical instrument of sorts. But that is where my question is coming. Like, while it is a magical instrument of sorts, why did the government even do it? Because government is actually having a cost of capital of nearly 10%. Gold returns plus 2.5%.
Yeah.
So cost of capital is nearly 10%. Why did the government even bring it in the very first place?
So India has a high demand for gold as a storer of value. We love investing in gold just for the sake of keeping it in our lockers and keeping it away after, I don't know, even gifting it for marriages. So in India, gold is mostly imported into the country. So we are a net importer of gold. And whenever these gold imports happen, we pay for it with dollars.
Yes.
So the government in 2016, they noticed that this was causing a lot of stress to the Indian rupee. A lot of gold was being purchased by Indians, and they thought that this alternate mechanism or this method will keep all the rupees inside the country. There will be no need for forex exchange, and they thought that this will be a net positive for the economy. So hence that is why they introduced it. In hindsight, might not be such a good logic, but at that time, right, especially when the rupee was depreciating so quickly, I would say it was a good experiment to have for the
So
government.
they had such ulterior motives in bringing out SGB is something which we can understand here. But now that we understand, hey, they brought it out because of that reason, and all investors loved it, including us. We loved that, as you rightly said, our go-to gold investment instrument. But now, why is the government even thinking to not come up with more SGB tranches? Why is government moving away from this?
So that is because if you look into the overall investments that came into SGB, according to financial year up to financial year 23 up to March, the
23-24?
FY 23-24
Okay.
March data, if you look into, there was 4.3 lakh crore worth of investments that flowed into SGBs.
Okay, so people have invested 4.3 lakh crores in SGB.
4.3 lakh crores. And now the question that you asked, right? So why are they doing this, and why are they taking that capital hit of another 2.5% additional interest they have to pay out? So 4.3 lakh crore on that 2.3% interest, 2.5% interest which they have to pay out every year is coming down to somewhere over 11,000 crores every year.
Interest payout alone.
Interest payout alone.
Okay.
And that is the amount which Indian government or our central banks are obligated to pay the investors.
Correct, because these are bond holders and the
Yeah.
government is having a responsibility, right, and a duty to actually pay out that interest rate because it's a bond. Yeah.
And that 11,000 crores, 11,000 crores is taking a very big dent on our budget, and that is increasing our debt.
Yes.
So when we look into the debt GDP ratio of India, this is causing a slight dent to that. And when Nirmala Sitharaman said that they want to bring down the debt to GDP ratio from some 58 odd percent to 56 odd percent, there are few steps that were taken, and this could be attributed at one step that trying to attack that debt to GDP ratio, bringing down that percentage.
So this is interesting, right? I mean, government had one objective of saving the economy, saving rupee as such, and that is why they brought this out to some extent.
Yeah.
And maybe that's where I'm going back to the term you used, which is an experiment. Probably this was an experiment, is what you're saying, and
An
they did it.
expensive experiment.
So maybe their objective was met. Maybe, I don't know. Maybe rupee is. I can't even say that because rupee is definitely not having a good time. It has not been having a good time over the last many years as well. But let's keep that apart. So government came out with an objective, and that is to protect rupee and protect import, export, and all of those. And that's why they came out with SGB, and it had its own many years, so many lakhs of crores raised from the market, and now they are probably discontinuing it, and it looks like most probably it is being discontinued. So what I'm thinking is, like, what happens to the original objective now? Is it met, not met? If it is not met, then what would government do now? Are there more interesting experiments which could come out, which might be interesting for investors like us?
So from 2011 to 2016, rupee depreciated by 50% against the dollar.
Okay.
Right? And that was the time in which they decided, hey, we have to do something. Okay, there is petroleum import, there is gold import, there are multiple categories. What all can we attack? And they chose gold as something that they can attack. And if they knew that if they started selling gold bonds alone, no one would be interested.
Yeah.
Hence, they had to give some additional benefit, 2.5% tax benefits along with it, right? And if you're looking at the last 5 years data, dollar to INR, yes, rupee has again depreciated, but it has only depreciated by 20%. So to some extent, correlation is not causation, but we can say that things are in a better place at least right now. That the same situation in which the government was in 2016, it does not exist, right? So they can take their foot off the pedal for a bit. Maybe they'll come up with it next year. They'll take a break of 2 years and they could come up next financial year.
Interesting. They
That
could maybe
happen.
always use this as a lever
Yeah.
whenever this problem happens from a larger import-export economy, rupee value problem. So they could always use this as a lever maybe.
Yeah.
Like they might wait out, and if things are going bad, they might come back again. But there's also this narrative of our exports increasing. I mean, the China going away, India becoming the manufacturing hub. So we are exporting a lot as well. So when we are exporting a lot, then that import problem is also not playing out. So maybe it is a good sign of the economy. Maybe economy getting better is why SGB going away is maybe we can find our peace there.
Could
I
be.
don't know.
But for investors, nevertheless, I think it's a losing situation.
Yeah, I remember us giving a farewell to Bank Nifty weekly expiry. So similarly, sovereign gold bond. I know it's not formalized yet, but if it is formalized, if it is going away, we should definitely do something about it. We should mourn the loss of sovereign gold bonds.
I think even if it is not fully taken away, there could be the benefits could be cut down, tax benefits could be brought down, the interest portion could be brought down. So whoever missed out on that initial wave of SGBs, I feel bad for them, right?
Yeah.
So it was an amazing period for you to invest in gold. We in our videos also multiple times talked about it. 8 years tax free, right? That itself is a major thing.
But let me just add this here. So even the primary new offerings are what is being speculated that is being paused or stopped. But from the secondary market, you can still buy. All the SGBs which are already live, which has a maturity date for the next 8, 7, 6 years, like from the moment it started. From the secondary market, you can still go and invest. So maybe for the next 6, 7, 8 years, you can still maybe benefit from it, given there's liquidity, given people want to sell it and all of those. But just adding that as a
that
point.
is still
In
there.
2020 and 2021, I personally bought it from the primary market. It was a very smooth process. But I think mostly you have invested through the secondary
recently,
market.
I think like a few weeks before, because I want to invest some more money and I want to pledge in for margin and sell options with it, I did buy SGB from the secondary market. I think 3 or 4 weeks before. It was a good time to buy gold. It did go up after that. But anyways, you can still buy from the secondary market.
So I think the only thing that you have to be wary about is the price, right? Are you getting it at the right price?
Right.
If that is sorted, then yes, you can still continue to enjoy the benefits of SGB by buying it from the secondary market.
Yeah,
But again-
but still, the crux of the matter being, if sovereign gold bond is going away, what is the best way to buy gold?
So there are only two best gold investment options right now available. One is digital gold. Second one is gold ETF. So if you are looking at a longer time horizon, so let's say 5, 10, 15, 20 years you want to invest into gold, digital gold is the best because there is no expense ratio, there is no other charges, there is only one charge which is 3% GST.
At the time of purchase.
At the time of purchase, and there is no recurring cost to it. But if you are looking to invest for let's say 1 year, 2 year, 3 year max, then you can look into gold ETFs because they have much lower expense ratio, which is 0.8%, but that is a recurring expense. So if you are investing for 5, 10, 15, 20 years, every year on the value you have to pay 0.8% 0.8%
Expensive.
0.8% expense ratio. So if you're looking for long term, invest in digital gold. If you're looking for a short term, invest in gold ETF.
Yeah, and it doesn't add up like 0.8% every year, right? So it adds up like if the value of gold goes up, you end up paying higher and higher expense ratios in absolute terms based on your first investment. But in the other case, it's just 3% of the first investment. Digital gold,
Correct.
3% of your first investment. I think that's still a good win for long-term
And also
investors.
with digital gold, after a point of time, after a lot of gold accumulating, and in your life, if you come across a point where you actually need gold for making jewelry or whatever, then you can actually redeem digital gold as gold, and then you can give it to jewelers and make jewelry out of that as
Absolutely.
well. Where you're not actually selling it, and then there's no tax liability also, probably is something which I understand. Anyways, traders who always invested into SGB, pledged it for margins, and traded FNO with that, they're definitely hit with it. I don't think we keep saying, right, as FNO traders, our only job is to adapt to whatever SEBI is coming out with, whatever RBI is coming out with. So we'll have to continue our life. That's the only thing to be done.